Welcome to Momentum Monday. Today is Sunday, January 19th, right?
You're not really sure. I mean, what's the matter? Time means nothing. We're in a bull market.
Exactly.
All right, Ivan, take it away. I'm in Phoenix. Ivan still, it feels, even though he's in San Diego, he lives like he's in Bulgaria. There's no sunlight allowed in his room. You're like Dracula.
I mean, whatever. Yeah.
Okay, buddy.
So we're looking at a chart of the S&P 500.
We are. Is there ever going to be another down day?
Yeah, I think so. Yeah, that's how it usually goes.
Where is my?
So new all-time highs.
Can you see me?
Yeah, I can see you. So new all-time highs for the large cap indices, Nasdaq 100 and the S&P.
Look at that.
And one of the interesting developments from last week is that actually the small cap index outperformed.
Ooh.
It broke out and it's kind of trying to catch up.
It's interesting. Look at that relative strength, still 66. I think it's because it's still interest rates driven. Interest rates started creeping back down. I know this could be a false breakout, but yeah, small caps led by financials. And
I mean, there are quite a few sectors that are represented there, healthcare, biotech.
Yeah, small cap healthcare. I saw Jason saying it. That's beautiful.
Energy, right? Regional banks. So of course, for this index to outperform, we'll need to see a bounce in energy and financials, which so far we're not seeing. So
yeah, I mean, listen, I'm going to stick with growth, but for those people that are in small caps, I think congrats, I guess. They finally are playing catch up a little bit.
Yeah, the new earnings season has just begun. Already we have a few banks have already reported. So far the market reaction is kind of lackluster. Nothing of note. Here JP Morgan, we also had Bank of America.
Goldman's kind of getting ready to go to new highs. Wells is the only bad bank, I guess.
Yes, so far, yeah.
Well,
so Morgan Stanley, of course, yeah.
Goldman just.
So Morgan Stanley.
Talking about Goldman here for 3 weeks, and I never really traded it, but congrats to those. Wow, Morgan.
Yeah, big earnings gap is the only one that's actually worth mentioning from last week's earnings. And other than that, I also saw some very interesting, I think, breakouts in the semiconductor space.
Yeah, wow. This one does capital equipment. Yeah, Taiwan Semiconductor, the granddaddy. You know, I was talking about it at all-time highs. It just gone up 25%. Gone from 50.
So the actual earnings season kind of starts this week with Netflix, Starbucks, and then the week after that we have the big tech companies, Google, Apple, Amazon.
As it relates to semiconductors, you know, there's a lot of semiconductors in Phoenix, so I know a lot of people here. I've been making some calls. If we pull up the SMH, I think what secretly in the semiconductor industry, it's very anti-Trump. Not that anybody cares, obviously, but because these are all rich people. But you know, the tariffs are real if you're in the semiconductor business, and there's a lot of uncertainty, which could be good short term, which is, you know, everybody's stocking up on product. And the semiconductor companies are leaving the video up for a sec, Ivan. And the semiconductor companies are confused, right? Like, should we build in Southeast Asia, which they're going to have to do because the China thing is real in terms of, you know, the trade. If you assume 4 more years of Trump, which you have to assume this trade war never ends. And I don't think he cares about semiconductors because they're not major media companies. But if you talk to anybody in Arizona in the semiconductor business, the tariffs are real. And they're 25%. It's not like they're getting away with it. Those tariffs actually are happening. So I'm going to continue to avoid semiconductors as they've had a great run and head into the reality of what they do longer term with building fabs, et cetera, and passing those costs on down through the system. I own TER, which are pulled up. Pull back up NVIDIA. So I was talking to some crypto. I was talking to CoinMine, and they said there's 7 billion chips coming out of NVIDIA a year. That's one for every human on Earth. This is the granddaddy of chip companies in that sense, gaming, crypto. So you can see NVIDIA, you had a major crash with crypto back at the beginning of 18, but they're not just a crypto company. And obviously those people that bought the breakouts, the dip have done well. It took a year and a half. Okay, so that's it on semi. Sorry, Evan, but that's some information on passing.
Yeah, that's actually really interesting.
Yeah, you think about it because the market's at all-time high. No one's really digging deep. Semiconductor industry is a very global industry, not a very American. Hang on, my dog just saw a chart of gold. Hang on.
All right, and by the way, AMD is saying that they're coming up with a new chip that is supposedly, they say, is gonna be a major competition for NVIDIA. And maybe this is one
Who's
of
that, Ivan? AMD? Yeah.
AMD. They're saying that their new chip might be an NVIDIA killer. So
listen,
maybe there is a reason behind that 98.
Chip, my dog gets excited. Chip, snack. You want a snack? Oh, okay, keep going.
There is a reason because AMD has been doing so well, and this stock is what is it like?
This is one that the Gen Z and millennials, all the traders got right. This is like the Iomega of stock twits.
Yeah, this stock
Iomega
is
back in there was a stock called Iomega back in the 90s that made hard drives. Motley Fool. The Motley Fool community was all over this. If I could go, it's probably one of the most talked about tickers for a semiconductor stock, for AMD to be up there with, Apple and some of the other tickers on stock.
Yeah, absolutely. It's definitely one of the most followed names.
Yeah, interesting because no one talks about it in the mainstream, but the cult of AMD and Tesla have been phenomenal. Okay,
so we talked about that we're at the beginning stages of the new
that looks, Jesus, Ivan, that doesn't look like a semiconductor stock. That looks like a growth stock.
Yeah, they do. And one pattern that I noticed in the past few earnings season is that we would have very clear uptrends in the market right before the earnings season and after the major part of the earnings season. But during the earnings season itself, we saw a lot of choppiness and volatility in the past few seasons. And considering the big run that we had in the past couple months, I would not be surprised if we see something similar in the next 4 to 6 weeks, as thousands of companies are scheduled to report.
No doubt. I think, Ivan, what's happened technically is that luckily I get to read a lot of technicians for free, like all the premium products. And everybody's expecting a pullback, including myself. Shame on me. I sold Apple at 260, 270, 280, 310 as I carved it down. I'm more conservative than the rest, but everybody's looking for a pullback that hasn't happened. And that's generally how bull markets or this stage of the market, doesn't mean you shouldn't book some profits and be responsible, but we're at a phase now where everybody's just betting on a pullback, making fun. Barron's came out with Dow 30,000, which is 5% away, and they're getting laughed at by all the pros for calling the top. And it's just media, right? Occasionally the cover story works, but you've got to do your own work and you've got to do your own money management, and you've got to be disciplined. But this rally, who knows? No one can predict when it ends.
Yeah, of course. And, I already, so we talk about that pattern that I noticed. And the other thing that is really interesting in the past couple of weeks, that all the highly shorted stocks.
Yeah, you nailed that.
All the laggards.
Especially in January. Brian Shannon and you, of this, I think Trader Stewie, these highly shorted stocks just burst higher. Obviously, Tesla, AMD. Yes, what are the other ones? What are some of the
Tesla is an exception because they're near all-time highs. Most of those highly shorted stocks were near 52-week lows, and they had a big move, in January. This typically kind of happens right before some form of consolidation in the market.
Yeah.
So, be careful there. But yeah, there's so many of them. I mean, for example, last week we talked about this one, DDOG. It had a kind of failed breakout on Monday, but it held its rising 20-day, and it's still looking good.
Yeah. I mean, listen, it's a young company, and Roger Ehrenberg did the seed investment in this company. Where's the valuation on this? I mean,
12 billion.
12 billion.
It's a lot.
7 years ago, Roger did the seed in this, friend of mine, at, I assume, under a 10 million valuation. Talk about returns.
And of course, keep in mind that lockup expiration is coming up next month. So that might be also a factor.
Yeah, keep in mind too that a lot of these private companies that stay private longer, a lot of the insiders sell in the private. See, a lot of the rules people just don't know because all the old rules don't typically apply. Companies used to go public much earlier in their life cycle, so the 6-month lockup meant a lot more. Now companies get liquidity in Series D, E, and F, and through these, Fidelity and T. Rowe Price. So the 6-month lockup rule, if the company's doing well, does not apply. Let's look at Uber. When we all finally could sell, and I'm guilty as charged, I sold most of mine when I finally could after the lockup. Look at it's been a 30% rally since the day that Goldman, you know what I mean? So a lot of these banks have gone wise to that and help people create short squeezes off this.
Yeah, a lot of the laggards, even the marijuana stocks, get a big week.
Love when you say marijuana.
Marijuana, I said, no. So they had a big breakout Monday, Tuesday, Wednesday, and then consolidation through time. So I still think that they might squeeze even higher.
Full disclosure, I own some. I bought some at all the technicians. I was writing about this. All the technicians saw the divergence here a little early in November. It took one more low and quickly regained those lows. I mean, this could be, you have a very easy place to stop here, 15, 20% below on volume. This could be under a major reversal. The problem is fundamentals still suck in this industry and valuations.
Yeah, if you ask me, it's a game of musical chairs when it comes to those stocks.
But technically, these stocks look poised for higher.
Yeah, technically they're looking good, and they might squeeze even further. I mean, look at what happened in Beyond Meat. Just a tremendous move here at the beginning of the year. They basically doubled in 5, 6.
I've seen people talk about it. Okay, so what looks strong? I think small cap biotechs are being juiced right now, and that generally is sign of a short. I have my own sentiment rules, and I would say I'm seeing a lot of penny stock biotech chatter, and that generally is signs of some exhaustion in the market. But beyond that, I don't see any reason.
Yeah, this is related to the same theme that we just discussing, that there's so many of the laggards they're currently outperforming, which typically happens right before some form of slight pullback consolidation. Like, I wouldn't bet against the market right now, but I'm definitely careful and trying to take profits on strength. Another stock that I'm currently watching that is very highly shorted, more than 60% of its float is short, is Peloton. Have you been to one of their stores?
I do. I'm so tempted, Ivan. I like to set up my I just feel like it's still furniture that for most people becomes, again, I'm not bearish because I think they have a great subscription business. For the valuation that is at it and the amount of good setups, and the amount of apps. Listen, fitness is just ginormous. As Lulu is one of my favorite companies, and Nike obviously in my top 5. But Peloton's not there for me. What do you like about it? High short interest?
62% of the float is short as the stock is setting up for potential breakouts. The other week I went actually to their store in UTC.
And
it's really well designed, beautiful store, and
because they're selling $2,000 products.
A lot more than just their Peloton bike, and they're selling clothes, shoes. So it's which look really good actually. So it's a kind of lifestyle brand, I would say. It might be
a long way to go before they're a lifestyle brand. I think they're a great.
We want to find them before they become one, right? Because
Ivan, I'm just giving you. You got. If you want fashion, you go Lulu, Nike. You're not thinking Peloton.
Yeah.
And
Yeah.
it is an exclusive kind of club at $2,000. Listen, they've executed, I would say, flawlessly, and I like the retail stores, but retail is full of landmines. Maybe they're getting great rates because retail's such a mess, and I really like the retail strategy. But again, there's so many great ideas out there. It's not on the top of my list, but yes, I agree with you with the setup.
Okay. I'm glad that you agree.
What else are you looking at? What else? I mean, look at Snapchat. I mean, what's interesting is, Facebook, Snapchat. Facebook gets all the hate. Snapchat quietly, everybody's forgotten about it because everybody complains about Twitter. And it's probably the best performing stock of last year. You could have bought the stock $4 or $5. You got a 4-bagger, 5-bagger. And like AMD, obviously completely different companies, but the millennials are all over this stock. My son lives on Snapchat. No one ever gave up on it. The teens never gave up. The Kardashians might have given up because they're all about the money and they're about getting paid, and Facebook is the bigger audience, but Snapchat's bigger than Twitter. And for great reason. I mean, to stay out of the news for the last 2 years and quadruple the stock and have the same market cap as Twitter where Twitter just, people are long then. It's unfathomable why people would continue to trust that company. But Snapchat has, been a beautiful, and I bet you it's highly shorted. Is it highly shorted, Ivan?
Yeah, of course. This is one of the reasons.
I think people are going to get surprised here. They have a cult like Tinder. Look at Match. God, it was on my 8 to 80 list and I gave up. Dating, look at $95. Volatile ride over the last, year, but all-time highs. So Match and Tinder, I mean, I wouldn't even be surprised to see once they spin it off, the Snap get bought by, what's the market cap of Match? Hang on.
It's 26 billion.
I couldn't afford them. God, I got to say that compared to Match.com, shame on me for giving up on this early. At 26 billion is not, dating app of the world is, hard to value. Okay, what about Chinese stocks? And I know you love trading them.
I mean, right now I don't really see any interesting setups in China. Many of them are kind of extended. Alibaba continues to trend higher. So I own some Alibaba for clients. I own some Tencent also. It's not very active, but it's just trending up. NTES is another one. It is tight range contraction near 350, even though it's kind of extended from its 50-day and 20-day moving average. So
look at Alibaba, all-time highs. Is anybody talking about Alibaba? No. Is anybody talking about Tencent, which finally, gaming is back?
Not here in the US. People are not talking about them because there's so many other stocks to talk about.
I mean, my smartest friend said it's going to be the biggest company, with cloud, and they have no competition in China, and it's going to be the biggest company in the world.
Do you know what's interesting to me right now? So we have all the big four, the big five mega caps. So most of them have been making new all-time highs relentlessly, like Microsoft, Apple, Google. And the only exception has been Amazon, even though they kind of started the year strong. They're still so far from, well, not so far, but relatively far from their all-time highs, with the S&P and the Nasdaq 100 at all-time highs. That really puzzles me because this stock, obviously they'll be here 10, 20 years from now. Obviously they continue to execute amazing.
Yeah.
And they're growing fast. And I'm kind of thinking that this earnings season, they will play a catch up. And I wouldn't.
They know what I mean, he's a maestro at that. I think what you're seeing with Amazon, because that's other than semiconductors, which, I told you I was making some calls. It's obviously that I'm trying to figure out Amazon here. And I think where Amazon's long-term Achilles heel is the same thing they did to retailers is what they, the miners, the stuff that's probably 8 to 10 years still away, which is the cloud, like verticals of the cloud. Amazon's making 60%, 70%, 80% gross margins on AWS. And their old saying, if you have margins, we're coming for them, is the same thing that's going to happen to Amazon here. You know, it's hard for them to lower their prices. And slowly, as machines get distributed, the cloud's going to evolve, and companies aren't going to want to pay, especially startups, necessarily. So Amazon's, you know, it's I think Hedges and other people are starting to see this. So yes, I think Bezos are going to have to come and load up the quarter with earnings, or maybe he just doesn't care about the stock right now. I mean, who cares? It's about, you know, figuring out what's next. But you're right. I mean, it's set up pretty good. It's trailing. I've been long for a very long time, but you know, their margins are going to get come for. Okay, so that's I think why they're lagging. But we can't be sure. I think the story of the year continues to be Apple. You know, they look at that. I mean, you know, $1.4 trillion, and you know, they dominate retail. They survived the iPhone cycle. It's all about the watch and AirPods, and you know, with 5G, there could be an upgrade cycle that's coming for them too. So, you know, I'm not selling any more, put it that way. But if you look at a monthly, it's kind of defied gravity the last 12 months. It's beautiful. And what is any other sector, Ivan, that you kind of excites you here?
No, that's it basically.
On the list. I think we've covered it pretty well.
The earnings season is just beginning, so we'll see definitely some new trends, and we'll see where the money goes. As of right now, it has been highly shorted stocks. Laggards in the first 3 weeks of January. I'm kind of thinking that at this point we might see some rotation into leaders, and this is why I mentioned stocks like DDOG and Peloton, because they're trading closer to their 52-week highs than to their 52-week lows. So we might see some rotation into leaders as the excitement about the laggards at the beginning of the year kind of dissipates.
All right. Well, have a great week, buddy.
You too, Howard.
Thanks, everybody. Thanks, Marcus Smith. And we'll see you next week.